This is Bazaar Morning Call, broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
You're with us here on a fresh new edition of Bazaar Morning Call. We are coming to you live from the CNBC-TV18 Motilal Oswal studios. And it's a rainy Tuesday morning, at least here in Bombay. But I guess it's raining bulls as well on Dalal Street. I'm Prashant, with me, my colleague Sonia and Nigel. Guys, hi, morning.
Hi, good morning. But it's shining bright on Dalal Street, right? I mean, it's, the sun is out. The only thing is, after so many days of gains, I guess some consolidation perhaps could be the order of the day.
Well, I don't know if bulls will agree, right? They want to go
all out.
Just absolutely, right? Yeah. But actually, the market re-accelerated yesterday. I mean, there was, as we were pointing out yesterday morning, last week was mostly sideways. Friday, the market broke out. And yesterday, it picked up steam even more. Actually, in the last 30 minutes for the Nifty and the last 1 hour for the Bank Nifty, I mean, both indices saw sharp re-acceleration, and that's a change. 0.75% higher on the Nifty 50. So this is quite something, which also now means that the Nifty is broken out of this small kind of recent consolidation zone. It's kind of decisively broken out with yesterday's closing that we saw. The global backdrop, I mean, I kind of discussed this extensively yesterday. It remains supportive. And it's changed. It's changed in a much more favorable way over the last 5 or 6 days. And last night, there were no indications that, I mean, there is any setback to that, which basically means that the hopes of soft landing in the US is basically the primary driver out there. The Nasdaq outperformance in that light continues. I mean, that index was up almost 1%. The S&P was up as well, but I mean, to a lesser degree. But the Russell 2000, for example, it's not just the large cap tech which is rallying. The small cap tech is rallying as well, and we can go into details later. Russell 2000 small cap index, which is a much larger index, that is rallying as well, which was up about 1%. Dollar, US yields, both were well behaved. The dollar index remains under the 100 level, which gets us to the market here, the levels you need to watch out for. You know, yesterday we put out the first level on the Nifty, which will be in focus. At yesterday's close, we were 20 points short of that. We put out a level of 19,740. We left off at 19,710. I mean, I didn't think we'll get to that in one day, but that's the kind of market we are in. In the near term, 19,818 will be the upside level to watch. That is nothing but the upper Bollinger Band, which is also moved up because the averages are moving up. So the band also moves up a little bit. So we are at, that now stands at 19,818. That's the immediate kind of target to work with. On the way down, support will come in at roughly around the 19,500 levels. Again, that's 200 points out from here, but that's the closest. That's the 40-hour exponential moving average. That's the closest I could kind of find with the kind of pace that the market is putting on. Bank Nifty will eye the previous peak, and this is the same level we put out yesterday, which is 45,655. We left off at 45,450. Banks also participated in a very handsome way after Friday's reversal higher that we kind of alluded to. On the way down, the swing low of 45,547 will be the number to work with. So that's the level for the Nifty Bank. Small caps and mid caps, they continue to see pretty robust action. I mean, actually, it was not so much mid caps, but it was small caps. The index, the small cap index, is now just about 5% away from its all-time high level. Remember, those indices are still lagging, but they're also coming up pretty fast to the previous highs that we saw there. I mean, the GIFT Nifty is indicating a flattish start, but that's just the start, and we'll pick up from where that is at as we begin another session. Sonia.
Oh, absolutely. And, the strategy is pretty clear, right? All you got to do is just stay with the trend, and you're kind of making money all the way. And the trend is on the upside. The momentum is intact. In fact, we hit record highs for a second straight day yesterday. And now the Nifty is what? Just 280 points away from that 20,000 milestone. So just a matter of time before the 20,000 milestone gets hit on the Nifty. If you look at individual sectors as well, a lot of the laggards are coming back in a big way. Yesterday, for the third straight day, the Nifty IT index was at a 52-week high and gaining ground as well. So banks, IT, all are performing. And of course, you have big numbers this week as well, the likes of Reliance, ICICI Bank. So you'll get some more participation perhaps towards the end of the week. The only thing is that flows have thinned out a tad bit. So yesterday, There was buying both from FIs and DIs, but barely any amount, about 75 crores of buying from FIs, 65 crores from DIs. But I'm watching out for what's happening in the US markets because it's been a sixth straight day running of the Dow in the green. Of course, we all know that there are now possibilities of perhaps a rate cutting cycle beginning as well, although there's no confirmation of that, but that seems to be the rising narrative with the way inflation is cooling off. It's an important week of results in the US. You have Netflix, Tesla, Morgan Stanley that will be reporting numbers. And later today, you have the June retail sales in the US that will come through. That will give you a sense of how consumer health is doing. So lots to watch out for. In results in our own markets, there's IndusInd Bank, there's Polycab, which has been a big gainer. We've been talking about that ad nauseum. ICICI Pru, L&T Tech will be reporting numbers as well. And through the course of the week, tomorrow, there's HUL, Infosys, then Reliance and ICICI Bank. So plenty to talk about. But I think staying with the trend is something that has worked in favor of the bulls. And I think even if there is a little bit of consolidation today, just keep it on the upside and keep it with the trend. I guess that should work.
Absolutely, Sonia. The trend is on the upside, so you don't want to fight the trend, right? Yeah. And the Nifty's continue its march towards the 20,000 odd mark. In yesterday's trading session, the first half of trade, well, it belonged to Reliance Industries. And towards the end, the Nifty Bank, that saw a big surge in trade, and that too backed by big open interest build-up as well. So the long addition in the Nifty Bank, that's what held the Nifty in good stead as well. The near-term support on the Nifty, well, that moves up to around 19,500 odd, going by the options data, which we'll get to in just a bit. What are the FIs doing in the F&O market? Well, the Qs coming in are very, very bullish. Yesterday, the gross buy number was a little bit lower, but otherwise the Qs in the F&O market, well, they're bullish. They added close to around 4,500 long contracts. That's close to around 2 longs for every 1 short position. And the long positioning now stands at around 70%. The net long position has not yet hit that 1 lakh contract mark, which makes me a little bit cautious. So we're still a few thousand contracts away from that mark. On the index options side, they bought more puts than calls. But what's encouraging is the way they're writing puts. And yesterday as well, we saw a very, very aggressive writing on the put side, which brings us to the 2 most active strikes that I'm looking at today. On the Nifty, the 19,600 put, well, that was very active. In a single trading session, it added more than 1 crore shares. So aggressive writing is what we saw at them. And since it's Nifty Financial Services Index expiry, well, we'll keep an eye out on that. The 20,200 put as well, that was very active in trade. Yes, the trend is up. Yes, everything is looking good. But just a couple of words of caution won't hurt anyone, right? So just 2 points I want to pull up. One is the Nifty ended higher. Maybe the India VIX, from, very, very low levels, it's seeing a bit of a bounce. But that's normally not what happens when the markets move up. So that's point number 1. Second factor is the PCR. It's moved back to around 1.55 odd. Remember the last time it went to around 1.6. We saw a pullback of around 100 points or thereabouts. So just keep an eye out on both these 2 Qs as well. And putting some caution on the table won't hurt anyone. Support levels you're looking at, you need to stay long on the index. But going by the options data, on the Nifty Financial Services Index, you have both those 2 support levels. For starters, the implied start is a gain of around 40 points. Need to stay long on the index and trail your stop losses. Prashant.
Right. Absolutely. I mean, stay with the trend, and I think that makes absolute sense. Well, on equities, here are some views which are coming in. Pankaj Chachoria of Antique Stockbroking says, Indian equities continue to create new lifetime highs supported by strong FPI equity flows. He says US bond yields cooled off by 20 basis points as consensus is building for a lower US Fed rate by 2024 end, given better than expected June US CPI and core CPI readings. He says in terms of corporate results, so far IT companies are seeing weakness in discretionary spending with a focus on better ROI and cost optimization projects. However, he adds, domestic demand momentum continues, as is visible in banks, cement and real estate. He says that the market return appears to be capped in the near term, and their March 2024 Nifty target stands at 20,500 based on 19 times FY25 earnings estimates. And that earnings estimate for FY25, according to Pankaj, is 1,062, which is implying about a 4% upside from where we are.
Okay, well, an interesting thing that happened yesterday was in the currency market. The rupee actually had a lot of strength. It ended about 13 paise higher at 82.04 to the dollar. And here's the expectation for today. Abhishek Goenka of IFA Global says that lower than expected US inflation prints have triggered a sell-off in the dollar. He says the July hike could well be the final hike by the Fed in this cycle. He says the dollar has therefore weakened and risk assets have rallied, as is typical in a setup like this. He adds the rupee has underperformed in a weak dollar environment, and he expects the dollar weakness and the rupee underperformance to continue. He expects the dollar INR to trade in a range of 81.60 to 82.90 over the medium term.
Okay, well, on bonds, Ajay Manglonia of Jio Financial says the markets are expected to be mostly range-bound on the back of lower U.S. inflation, boosting sentiment ahead of the Fed meeting. He says liquidity remains robust, but oil prices have edged a little higher, so he does not expect very much volatility. He adds STL auctions are expected to have firm bidding today. Ajay says with no domestic triggers, he is expecting the 10-year benchmark bond yield to trade between 7.05 to 7.1% today.
Well, we have a lot of stock-specific action to track for you. Get to that in just a bit from now. But for the time being, let's run you through the top 10 stocks that we're looking at. Infosys, HDFC Bank, Federal Bank, Sheila Foam, Amaru Raja Batteries, Zee Entertainment, Rail Vikas Nigam, and Texmaco Rail. Their stocks on positive news flow. While on the flip side, a couple of earnings reactions from the IT space. LTI Mindtree and Tata Elxsi could be reacting to a bit of a subdued set of numbers.
Okay, well, Arvind Sanger is now joining us, Managing Partner at Geosphere Capital Management. Arvind, good morning. Great to have you with us here on the program. Thanks very much. Things are looking good, aren't they? Almost, I don't want to use the often abused word Goldilocks, but, inflation is coming under control in the U.S. I hope it's not one of those things where we see a sharp reacceleration in the next sprint. But many indicators are now pointing to perhaps a softer inflation number, whereas the labor market in the U.S. is still pretty strong, exactly what the Fed would have wanted. Your thoughts on what this means for markets?
I think we're in this, I guess Goldilocks, you use the word, and that is a popular term, soft landing, whatever you call it, hope. I think that, clearly the Fed is going to raise 25 basis points. That's almost certainly on the cards for next week. But beyond that, they're probably going to, give a signal of pausing and looking at data. The real challenge, I think, is going to come later in the year. If inflation comes down to 3% and gets stuck there, what do? Right? It's headed in that direction, or does it go lower? And if it goes to 2.5, 2, everything is great. But, I think there are question marks about whether all of this will end well. But I think the reality is that for the next few months, I do not expect any nasty surprises for the next couple of months, and therefore, I think it's time for the markets to continue to do well. Particularly, risk on as it's on, money will flow into emerging markets, and India is obviously one of the better positioned emerging markets globally. So that's a sweet spot to be.
And Arvind, hi, good morning. That's the problem, right, with these markets. Just when you expect no nasty surprises, boom, there comes one nasty surprise. So the market doesn't always oblige. And this has been a market that has sort of climbed every single wall of worry up until now. Are there any risks on the horizon that equity investors need to be worried about, especially in a market like India? Or do you think it's a clean slate until the end of the year?
Well, I mean, look, monsoons is proving to be a little bit of a mixed bag. Right? You have deficient monsoon in the south. You have too much rain in the north. So rather than looking at the total monsoons, you have to look at that. And what are the implications for some, vegetable and other inflation? So inflation has been, India has been one of the best places in the world in terms of inflation being completely under control. Now you're seeing global inflation come down, certainly in the US. Is there a risk that Indian inflation could start to harden a little bit? It's not a central case, but it's something worth keeping an eye on because, that would be kind of contrary to what is trends going on globally. And it's something that could cause some near-term nervousness about, RBI's ability to cut rates and maybe even having to go the other way if things get out of control. That's, again, not the central case, but it's definitely a factor that people cannot completely ignore.
Hi, Arvind. Good morning. Arvind, you said no nasty surprise coming in from the Fed, but will there be a pleasant surprise? Do they go ahead and cut rates later this year? That seems to be, what global equities are factoring in at least the last couple of weeks.
I don't think, when I look at the probability for rate cuts, the expectation is not for a rate cut later this year, but the expectation is for a rate cut early next year. But yeah, if the Fed gives a clear signal that they are, close to being done, or that they sound a little more dovish that they can afford to be patient since inflation is coming down, that will certainly provide a little more fuel to the fire of the optimists. So I think that, the more likely outlook is something on that line.
All right. Arvind, just one more point. I recall when you visited our studio, you were quite positive on a couple of domestic themes out here. But how are you positioned on IT themes? Because the IT companies, they started reacting to reporting numbers last week, and the street wasn't prepared for any kind of positive surprise. But it wasn't so bad, it seems, and those IT stocks here in India have given big returns just in the last 3 to 4 sessions. Your positioning on tech?
Well, we are not there. Look, at some point here, when things get cheap and get lagged enough, then there is a value rotation possible into IT, and I think IT is one that we've kind of kept an eye on. But if we rotate out of some of our stocks when they get expensive, we would look at IT as value plays. But I think I remain somewhat cautious on the U.S. economy. Later this year and early next year, I still see a recession risk. So IT may be a trade, but I'm not sure fundamentally whether IT is a place to be. I think there are going to be opportunities selectively, particularly with AI and everything associated with it becoming more of a theme in 24, 25. I want to look at companies that are positioned in India to be able to provide the services needed for implementation of that, which may not necessarily be all the broad-based large IT companies, but it would be more selective IT names that would benefit from that more significantly.
Arvind, just one, just an observation actually more than a question. I don't know if you have anything on this one, but there's almost a drumbeat of opinion coming through on how the next decade is India's, and you got Capital International, for example, writing an essay which is being circulated quite a bit. And very well written piece underlying the fundamental structural advantages that India has. Bernstein wrote something recently. Morgan has been pointing out, and of course there are so many others. How do you read all of this? I mean, there are those who say, well, we've seen this story play out before. I've seen this in 2006, 2007. But would you take that as a sign of caution at the margin, or would you say that, this adds a put for markets? It won't let markets fall too much whenever that selling does come through because of the structural kind of eye on the longer horizon. Your sense?
Well, I must admit to being guilty of the same thing. I hosted a panel at Asia Society in New York about a month ago, talking about is the coming decade India's decade, with a few panelists discussing exactly the same issue. So yes, I am cautious, having seen India for a while, of India having the tendency to not miss any opportunity, to miss an opportunity. But the reality is that this time, the confluence of global circumstances are falling into India's lap, right? That the fact that China is, self-selecting itself out, and the global, political system is, the West is looking for alternatives to China. And in the past, for textiles and other things, Southeast Asia, Bangladesh could all step up. But when it comes to large-scale manufacturing and electronics elsewhere, there's no other large domestic plus export market that can be developed. And India's, what used to be India's negative, its large population, is today India's biggest strength. And having had, a confluence of circumstances, you have a lot of infrastructure that has come together. You have a financial infrastructure that has come together. You have the cheapest data. You have a lot of smartphones. You have a huge penetration of data. So it's a confluence of circumstances that have come together. And I think India is in a position to take advantage of it.
Okay, and I think we're not alone, right? It's like a global sort of a wave that's taken all markets with it. Got that. Thanks a lot, Arvind. Appreciate your thoughts, and thanks for joining us on CNBC-TV18 this morning. Let's slip into a quick break. There are plenty of stocks. There's a big $2 billion deal that Infosys has inked. We'll talk more about that on the other side of the break. Do keep it with CNBC-TV18. Welcome back to Bazaar Morning Call. Our research team is standing by with a list of top 10 stocks for the day, and there are plenty in focus. Infosys has signed a big $2 billion deal in AI, so we'll talk more about that. Reema's here to give us the latest on all of that. Reema, over to you.
Thanks so much for that. So let me start with Infosys, where the company has said that they've gotten into a strategic agreement with an existing client. And this existing client is for providing AI automation-led development, modernization, maintenance services. And the total client spend over the next 5 years is estimated to be $2 billion. Now, the question is, will it cannibalize the existing business from the client? Because it's not a new client. So that's the clarity that we don't have. All we know is that it's overall going to be $2 billion over 5 years. Two more numbers, LTI, Mindtree and Tata Elxsi. Now, LTI, Mindtree is a subdued quarter, flat growth in the current quarter. Margins have expanded, which is a positive. Deal wins are higher on a quarter-on-quarter basis. But given the slow start to the year, the company is no longer talking about the double-digit growth that they were earlier hoping for in FY24. And the other one is Tata Elxsi, where again growth rates have slowed down. So on a quarter-on-quarter basis, we're looking at a revenue growth of 1.5%, constant currency revenue growth of just 1.2%. Margins have fallen by 20 basis points quarter-on-quarter, but you look at the margins on a year-on-year basis, and you can see more than a 300 basis points decline in margins. And the company has sounded cautious on the transportation verticals, where decision-making, deal wins, ramp up is taking some time. Back to you.
All right, thanks a lot for that, Reema. Well, let's hop across to Abhishek. He's joining in to tell us about HDFC Bank post the con call, and Federal Bank. One of their units will be doing an IPO. Abhishek, morning.
Morning, Nigel. So to begin with HDFC Bank con call, they did highlight that HDFC Limited has been merged into the bank effective 1st of July. So the numbers will come in Q2. They'll ensure that they will cross-sell other banking products to the customer of HDFC Limited. The best part about the loan growth was the retail portfolio. Domestic retail advances grew by 20% YOY and about 4% sequentially, led by the home loan segment. The wholesale segment or the corporate portfolio actually declined on a sequential basis. So their focus will continue to remain on branch expansion and digital expansion. ROA target is about range of 1.9% to 2.1%. Credit growth will be 17 to 18% X of intra-bank portfolio that they have. And target is to get deeper customer engagement with the bank. So they will not do any land financing that they will acquire from HDFC Limited. Brokerages remain bullish on the stock. They have target price ranging from as low as 1,970 to as high as 2,200. And all of them remain bullish with an overweight buy rating over there. Federal Bank, the board of Fed Bank Financial Services, FedFina, has revived the IPO plans. So the IPO will be undertaken through fresh issue as well as offer for sale. So the size, OFS portion, etc. details will be informed in due course as per the press release. Federal Bank holds about 74% stake over there. Now sources tell CNBC-TV18 that Federal Bank will sell about 1.65 crore shares. The other investor, True North, will sell about 53.8 lakh shares, and the fresh issue size will be about 750 crores. Back to you.
All right, thanks very much, Abhishek, and we'll keep an eye out on some of these stocks from the financial space. Now, there is a big deal in the mattress space. Sheila Foam is buying Kurlon. Mangalam is here to tell us more. Mangalam.
Well, in the mattress space, this definitely is a deal of the giants, and it perhaps will be the stock of the day. And that's largely because there were reports earlier, and now it's confirmed 95% stake in Kurlon is what Sheila Foam will buy for about 2,150 odd crores. Kurlon's last 3 years' revenues, FY23 numbers have not been, displayed yet, but last 3 years' revenues have been between 800 to 1,000 odd crores. So, assuming that that stays, then the deal has been valued at around 2 times price to sales, which is half of which Sheila Foam trades at as well. So it's a positive on that front. Secondly, it will aid Sheila Foam's India revenue by about 50%, their overall revenue by about 35% as well, and will consolidate its market share. The combined market share would be well above 35 odd percent itself. And also watch out for geographical synergies that they will get, because Sheila Foam is a strong player in North and West, whereas Kurlon is a strong player in South and East. To add to that, there will be distribution and cost synergies as well. What we need to know is that this 2,150 crore deal that there is, how will that be funded? Because Sheila Foam's cash and current investments are close to around 750 odd crores. If they do take debt, how much will that be? And what's the kind of synergies and scalability that they're expecting from this? But it's not just a mattress company that they've bought. They've also invested 35% stake for 300 crore for a 35% stake in Furlenco to enter into the fast-growing branded furniture market. So let's see how that pans out for them as well.
Okay, so important to see how they fund this acquisition. About 700-800 crores could be funded through internal accruals, but the rest will have to be debt on board. So that would be important for investors to know. Rahul Gautam, the chairman and managing director of Sheila Foam, will be with us in just a short while from now to discuss more on that. But the other stock in focus is Amara Raja. Sources say that Clarios ARBL could be exiting their complete stake, 14% stake in Amara. Vivek is here to give us more. Vivek, over to you.
Well, that's right. Good morning. So Amara Raja, expecting a very large block deal over here. So sources indicate to us, like you mentioned, Clarios ARBL Holding, which is a strategic investor. It's a global battery major. Now they're looking to completely exit the 14% stake that they held in the company at the end of the June quarter. The deal floor price has been set at a 5% discount to yesterday's closing price. So the floor price is at 651 rupees a share. And at that price, the deal size is almost over 1,550 crore. Remember, in 2021 too, they had exited 10%. So this is a complete clean-out trade, expecting Amara Raja to recover post the block deal.
Okay, all right. Thanks a lot for that, Vivek. Let's hop across to Surbhi. She's here to tell us about some more stocks that are in the news. Morning, Surbhi.
Morning, Nigel. The first one on my radar is Zee Entertainment. So yesterday in the last hour of trade, we got to know the company issued a statement that they have formed an interim committee to oversee the operations in the absence of Puneet Goenka. Later, Puneet Goenka has written an email to his employees emphasizing that the merger is his top priority. The email said that the company is all set to merge with Sony and the issues that he is facing is at the promoter level and should not be the problem of the company. He further said the Zee-Sony merger is in the interest of all the stakeholders and the completion of the merger is his top priority. Next on my radar is RVNL. There's a report on ET that suggests that government officials have asked RVNL and their Russian counterpart TMH to resolve their differences. Just to go ahead and give some context, RVNL and TMH had emerged as the lowest bidder for the Vande Bharat tender, wherein JV RVNL would hold 25% stake and TMH would have 70% stake. There were reports that indicated that RVNL had asked for a higher stake post bidding, and so in that regard, government officials have asked the company to resolve their differences and to sign the tender. CNBC-TV18 has not independently verified these reports. And lastly, Texmaco Rail is also on my radar. The board has approved a fundraise worth 500 crores.
Okay, all right. Thanks a lot for that. Thanks to our entire team. There's so many stocks in focus today. But in case you missed out on any of them, here's a quick recap for you. Top stocks with positive news flow. There's Infosys, HDFC Bank, Federal Bank, Sheila Foam, Amara Raja Batteries, Zee Entertainment, Rail Vikas Nigam and Texmaco Rail. While stocks with negative news flow, there's LTI Mindtree and Tata Elxsi. But also, there's lots been happening in the world of crude. Brent crude prices have fallen a bit overnight. Manisha Gupta joins in for a roundup of all the action there. Manisha, good morning.
Morning, Sonia. Thank you for that. Well, yes, we did see 2% of decline on the crude varieties overnight, but we are trading steady in the Asian markets right now, while, of course, the weak China data continues to weigh on, and the fact that the 2 of the 3 shut Libya fields have resumed operation. The markets also are looking at the U.S. shale output projection on the lower side for the month of August, as low as 9.4 million barrels per day. And also remember, this is a summer driving demand season in U.S., and the markets will wait for the Wednesday weekly inventory data. That would give you further sense on where the crude prices could be headed. In the meanwhile, there is further extended decline in the metals as a sector. The weak Chinese data, the rebound in the dollar index seem to be weighing on, and the Shanghai metal inventories have risen for a third straight week. That seems to be weighing on metals as well. So copper fell 2% overnight, zinc, nickel are trading in the negative, steel is trading at a 5-week lows, coal at a 2-year lows. Many of these industrial commodities still under pressure.
All right, Manisha, thanks very much for that. That's Commodities in Focus. We'll take a very quick break here. We are back. Rahul Gautam of Sheila Foam will be joining in to talk about the big deal of the day, their acquisition of Kurlon. Stay tuned for that exclusive conversation, which is coming up right out of this quick break.
Welcome back. You're tuned into Bazaar Morning Call. Hope you're having a good morning. Well, as promised, let's get straight to an exclusive conversation. We have Sheila Foam, who's in focus, that company's in focus, as they bought 95% stake in Kurlon at an equity valuation of around 2,150 crore rupees. The company has also invested 300 crores for 35% stake in Furlenco. Mr. Rahul Gautam, the CMD at Sheila Foam, joins us on the show. Hi, Mr. Gautam. Good morning. Thanks so much for joining in. Well, we had quizzed you about this earlier, and indications were that this was in the works. So congratulations on this big acquisition. I had two-part question for you. One is, how do you fund it? The total outgo will be roughly around 2,300 crores. So break up the funding, and of the acquired entity, could you tell us what is the margin profile?
So the total requirement of both the companies would be about, you're right, about 2,350. About 850 we have on our balance sheet. Cash is available. Balance, we are still to figure out that how much debt and how much equity we would do, but we'll probably need to do both. The balance sheet is reasonably unleveraged, and therefore there should not be any difficulty on getting debt. But we would definitely want that the balance sheet is, the ratings remain intact, So those numbers are still to be worked out.
And the margin profile of the acquired entity?
So margin profile, currently Kurlon is not doing very well. It's down to about 4.5–5%. But just as we step back 2 years, its normal levels were about 1,000 crore top line and about 13–14% as the EBITDA. It will get very soon back to those levels.
Okay. Mr. Gautam, good morning and congratulations on the acquisition. Just a couple of more follow-up questions. You said that the balance will be funded through debt and equity, so I'm assuming the entire 1,500 crores would be funded through debt and equity. In terms of debt, how much are you comfortable taking on board, say by the end of FY24, FY25? What would be the maximum debt and debt to equity ratio that you would be looking at?
This time that we would not take debt more than what would spoil our balance sheet or our capabilities, depending on the ratings, etc. So we would, I'd have no numbers right now to share, but we'll work that out.
Okay. So just one more question. Once this entire, transaction goes through, what would the combined market share be of both the companies?
So listen, it depends on how you define the market. So if you just look at the mattress market, about 60–65% still sleeps on some kind of traditional mattresses, and the modern mattress market is only 35%. And of that, there is the organized sector and the unorganized sector. So if you just look at the organized part, maybe the total up may come to close to about 40%. But if you look at the entire traditional market, because there's a lot of movement between the organized and the unorganized, we would be about 20–21%, both put together.
Mr. Gautam, hi, good morning. Prashant here. Congratulations once again. Just
you.
A quick point. You said that normalized top line was 1,000 crores and margins used to be 13–14%, and you'll get there quickly. Now, Kurlon, the brand is very strong. I mean, we all know of it, although I've not been in the market for a mattress for a long time, but it's a well-known household brand. But what is the reason why numbers deteriorated sharply at Kurlon, and why do you think you'll be able to? I mean, what were the causes for that, and why do you think you'll be able to go back to the prior normalized levels quickly?
I think they intended to do a few transformational changes, and straight away ran into COVID, so those changes couldn't come about, and the COVID played truant with it, And that's the reason that those things can be very quickly changed back to what their normative or normal levels of operations were.
Okay. So in F5, could you give us some sense by when what were FY23 numbers, for example, on the top line? If you can share that with us, by when what would your targets be? Some broad idea in the ballpark.
So I think the FY23 numbers, we don't have the numbers or the audited numbers as yet, but they will be far better than the FY22, which is already on record. And I would say that the 1,000 that we are talking about, we should be able to be on a run rate basis from January, February onwards of 24. Yeah. So really, the full advantage, you should be looking at FY25.
All right. Are there any synergy benefits, Mr. Gautam, from this particular transaction? If you could quantify it, point number one, and also both the brands will exist?
Yes. Well, I mean, somebody from the panel just now said that Kurlon is an extremely strong brand, and it's been there. In fact, it's been a little longer than us. So the synergy benefits are there. Number one is that on the back-end side, we would have some consolidation, some values or of raw material that we would be purchasing. The volumes will probably get us some benefits. There are synergies existing on that. We understand foam and foam manufacturing. They understand the coir part of it extremely well. And
Mr. Gautam, you want to quantify it? I mean, in terms of a synergy benefit, you would have done some back of an envelope calculation, right?
So I would say that in a couple of months, we should be adding at least 300 basis points.
Okay, 300 basis points would be what? On the top line or on the margins?
No, on the margins. What I had talked to you was only the back end or the cost side of it. On the front side, of course, also we are completely differently wired in the sense they're very strong on the south and east. We're strong on the north and west. And the way that they sell the product is more through MBOs. We do that through EBOs, etc. So I think when we start plugging the gaps and looking at it, there would be increases on the top line.
Okay, I'm sure you're still working the numbers out, so that would take some time. Just wanted to talk a little more about the Furlenco stake buy as well. Are you looking to raise your stake further over there? Is the company profitable at the moment? And what kind of growth rate are you expecting from Furlenco?
So currently, the stake that we would have after this infusion would be 35%. There is already a private equity, which is about 26%. The promoter group is about 12%, and the balance is all divided into some 60 or 70 smaller investors who are there. We are, of course, open to increasing this equity, but I think we will spend some time and take a call a year down the line. On the profitability, it is already operationally, EBITDA is positive. As soon as the financial side is taken care of, we should be profitable by October this year.
Okay, Furlenco will be profitable by October this year. All right, thanks a lot, Mr. Gautam, for joining in. And once again, congratulations, a very big acquisition that you've made. And I'm sure it will be synergistic for you and your business. Congratulations on that. That's Sheila Foam talking about the acquisition that they've made and how they're going to fund it. The total requirement will be about 2,400 crores, out of which 850 crores will be funded through cash, and the rest they're looking at raising either debt or equity. Amisha Vora, Chairperson and Managing Director at Prabhudas Lilladher, joins us now to talk about that. Amisha, thanks for joining us on the show. Appreciate your thoughts. Of course, the market has been in fine fettle, but before that, I mean, I don't know if you were listening into the conversation, but this is a big deal in this mattress space, Sheila Foam and Kurlon. How are you feeling about this entire segment, and particularly on Sheila Foam? Any thoughts?
I think it's a very positive move because there are a lot of parts in the jigsaw puzzle which will fit in well. Particularly, both have a very distinct distribution and markets. And when you combine, it will make the joint Sheila Foam a broader national brand. Of course, they have Australia and European operations. But particularly when it comes to India, they are very north focused, while Kurlon is very south and west focused. So that will fit in very well. In terms of products also, there is a good complementary work that can be possible. And above all, ultimately, it's a free cash generating business. And once Kurlon also is turned around and synergies are found, I think it's a very, very positive move. And beyond that, I would say that their move on taking 35% in a new age business is also positive. Generally, when you do an acquisition of this size, it is possible that numbers take little time to fall in place, because first time, instead of free cash in the balance sheet, there will be a little debt possibly, or there will be a dilution, and the synergy benefits will take time. But if we have that patience, I think it's going to work really well.
All right. Hi, Amisha. Good morning. Good to hear your thoughts on that particular deal. Amisha, I wanted to ask you about Z. The last time you joined us, I recall the stock was 180, 190 odd, and you said, Nigel, risk reward will favor you at these particular prices. That seems to have worked out. What's the call now at around 230 rupees on Z? Would you take money off the table, or given that now there is, further clarity with regard to the merger with Sony, will you hold on to that position?
I would say that from investment perspective, these are 200, 230, 250 are still levels of deep value. There is a lot which is going to happen as the two merge in terms of the business and strategy and consolidation benefits. So all that is not priced in. What is priced in is just that the uncertainty is slightly reduced. The fact that whether Z or Sony merger will happen, that kind of uncertainty which is there has slightly reduced. I think once it really merges, the synergy benefits will drive the stock.
Amisha, hi. Good morning. Prashant here. Any thoughts, Amisha, on Root Mobile? There was another, it was victim of the, I should not say victim, but the market did not like it. It's a bit of a convoluted kind of transaction, complicated rather, and the stock did end down about 7-8%. Any thoughts on this one?
Frankly, I have not studied the transaction as well. I saw the stock really tanking badly yesterday, but it would not be nice on my part without study to give any opinion.
Sure. Since we're talking about this space, I wanted your thoughts in general on the IT sector, Amisha, because it's come back in a big way. Stocks like Tech Mahindra at 52-week highs. We just heard that Infosys has signed a $2 billion deal in the AI space. What are your top picks in this space now?
So as what all of us we know, that the US recession, which we all kept fearing, is really not materializing. And now, as we know, the talk is of a soft landing rather than any hard recession hitting them. In that case, the first to take off the ground would be these free cash generating companies where valuations had taken a knock, but the long-term growth is still good. So that's how we see the tech sector has started coming back. Fortunately, our research and strategy equal weighted and then overweighted last quarter IT. So that has really helped. Our top picks, as what I was telling some time back also, on one side it is Infosys and Tech Mahindra, and the other side is stocks like Persistent. So we have a very selective basket across, and we think that this should do really well.
All right, Amisha, stay on. We'll just come back. We have about 15 minutes left for the pre-opening rates to kick in. So let's slip into a quick break. On the other side of the break, will the markets continue to hit record highs, or is some consolidation on the cards? Anuj will be joining in for a quick trade setup. Post that, we'll bring you the top stock picks for the day from our technical and F&O experts. Stay with us.
Okay, welcome back. 10 minutes to go for the pre-open session. Anuj is here in the studios to tell us what he's making of the overall price action. Anuj, morning.
Morning, Prashant. Well, it's been quite bullish, right? But what's very interesting is the sector rotation that's happening on a daily basis. And within that, what the big stocks have done. Just look at these numbers. Reliance is up 9.7%, almost 10% rally. Infosys 6.5%. TCS 5.5%. I think the big breakout yesterday was SBI. And this month it's moved up about 5%. And if you see the next plate, you will see some more names. Bajaj Finance, for example, is 5%. ITC almost 5%. ICICI Bank has moved up 4%. And this is what I wanted to focus on. ICICI Bank is up 3.6%. HDFC Bank is down 1.3%. Big breakout in HDFC Bank yesterday. I'll focus on that in a bit. But before that, just one more graphic, and that's something that I've been focusing on. Number of stocks hitting fresh 52-week high. Now, that number is approaching 300. It's reached 287. But within that, what's interesting is that it's largely A group and B group. 105 A group, 87 B group. Poor quality stocks only 95. This number, when it starts to approach 500, is when you start to get a bit worried about the market. I think that's still some distance away. Now, getting back to the point I was making on HDFC Bank, my sense is that that's leading to a new move on Bank Nifty. Yesterday, we had a fresh breakout on Bank Nifty, fresh all-time high on Bank Nifty on closing basis, and that ADR premium on HDFC Bank is now back to 15%. Remember, had come down to 12%, but it's now gone back to 15%. And look at that ADR, 4.5% higher. My sense is you'll see another fresh move in HDFC Bank. And even SBI, that's beginning to make a move. That fired the PSU Bank Nifty yesterday. So combination of HDFC Bank plus SBI, ICICI Bank, etc. I think now you might start to see a bit of a move from IT back to banks, which have been the leaders of the market. So the index to focus on from here on would be the Bank Nifty.
All right, Anuj, thanks a lot for that. Well, let's get to our technical experts with Mitesh Thakkar as well as Sudarshan Sukhani, who join us on the show. Good morning, gentlemen. Mitesh, you tell us, what's your trade on the index? I mean, the market is just going one way, northward. So what do? Trail your stop losses, take a fresh trade on the index. How would you approach it?
So, good morning, Nigel. I think a couple of things. One, on the Nifty, yes, I think, you would want to trail your stop losses now to about 19,550. But a fresh trade was triggered yesterday on the Bank Nifty when it started getting past 45,150. I've been highlighting that level, and yesterday, I think, we managed to get past 45,150, and that led to a test of earlier highs. I think Anuj was also highlighting HDFC Bank. I think clearly HDFC Bank, Kotak Bank, and State Bank of India look very strong, and all the three enjoy a good weightage in the Bank Nifty. My sense is that the Bank Nifty chart suggests a test of around 46,000 levels. So if somebody wants to buy a fresh in the index, it will be the banking index, which I would suggest. And now I think keep a stop below 45,300 at the spot. The first target should be closer to about 46,000. And once we start getting past that, another 500 points could happen. So on the index, that's the trade. Between the Nifty and the Bank Nifty, a fresh trade can be taken on the Bank Nifty.
Okay, fresh trade on the Bank Nifty. Got that. Sudarshan Sukhani is also with us. Sudarshan, how are you feeling about the market now? It's been, just a one-way rally. At some point, perhaps some consolidation is needed. But do you think this 20,000 mark could be hit this week itself?
Good morning, Sonia. See, 20,000 is a round number. It's quite possible that we'll hit that number and probably consolidate around those levels. Now, this is just an estimate. The markets can do anything, but round numbers usually do start offering resistance, and 20,000 is a round number. It's also a significant milestone in the Nifty's journey. So as of now, the market trend is clearly up. We are not looking at a consolidation. The trend is up. We want to buy on every dip. This is something I've been saying every day, and the markets have been justifying that statement. So stay with the Nifty, stay and buy a dip, and you'll get these intraday dips repeatedly. The Bank Nifty finally put its act together yesterday, and there are also some fundamental reasons, some fundamental factors that are playing in Reliance and HDFC Bank. So as of now, we should not be looking at a consolidation. We should expect the markets to reach a level where they will consolidate later. So the Bank Nifty is a buy also now, and the Nifty has been a buy. Stay on the long side, buy every dip.
All right.
All right. Got that. So stay with the trend. Gentlemen, good morning. Mitesh, in terms of individual trades and stocks, what do you have?
Morning, Prashant. All buy calls today, and I've been talking about a fresh breakout in the Bank Nifty. So I have HDFC Bank and Kotak Bank amongst my recommendations. Buy HDFC Bank with a stop at 1663 for targets of 1720. while Kotak Bank is a buy with a stop at 1875 for targets of 1945. Apart from that, Indus Tower is a buy with a stop below 167 for targets of 181, and Grasim is a conditional buy. I think the setup is positive. It needs to get past the pivot of 1800. So buy about that, keep the stop at 1784, and 1845.50 becomes the target area.
All right. What about you, Sudarshan? What would be the individual stock ideas for the day?
Well, BPCL is a buying opportunity. The stock had a very decent rally and is currently into a consolidation. Sonia, you know, stocks that consolidate, or even markets that consolidate after big rallies, eventually break on the upside. So that's the anticipation here also. Your stop is below 374. Dalmia Bharat is my only short selling idea. It's an intraday short. All short selling in stocks should be done only intraday. Consider going short in this stock with a stop above 2085. IndusInd Bank is one of the few banks that has been rallying even when the bank nifty was faltering and moving sideways and doing nothing. So that's an outperformer in the banks. Now, once the banks are moving, IndusInd Bank should do even better. So consider buying IndusInd with a stop under 1345. And finally, I have Pidilite. Pidilite is a slightly awkward chart, big rally, and then a large trading range. This should move on the upside because the Nifty itself has giving it a lot of tailwind. Buy Pidilite with a stop under 2550.
Okay, well, gentlemen, great speaking to both of you. Appreciate you joining us with those views on the indices, but specific trades as well. We'll take a quick commercial break here. The pre-open is, of course, 4 minutes away. We'll come back. We'll have the management of Kolte Patil Developers, which will join us to discuss the fourth quarter business update. Stay tuned for that conversation.
Welcome back to Bazaar Morning Call. We're just heading into the pre-opening rates in just a bit, but let's get the FNOQs out of the way. Manoj Muralidharan, Vice President Derivatives at Relicare Broking, joins us now. Manoj, hi, good morning. This market momentum is very strong, so tell us, what are you penciling in for today and what are the stocks that you're looking at?
Good morning, Sonia. Sonia, I guess the last 1 hour of trade yesterday, that was the most crucial part, because this is the second time in the July series that the call writers are squaring off their position. So the concept is called as a call unwinding, where the call writers decide to shift to higher resistance on the Nifty. Now, yesterday, 19,700 was the strike. And even in the FR data, it was reflecting the same. They have seen around 4,500 of net call buying. And there is some put writing of closer to 1,500 odd. So that gives you a cumulative 3,000 odd crores of index option figure that we have. So, even on the bank Nifty, if you see that exuberance that you saw on the call pricing, that was because of this call unwinding. So we need to understand this. 45,700 strike for the call option also for bank Nifty. Try to buy it between 120 and 130, because that more or less becomes a fair pricing. The target can be 200. The stop loss here should be 70. We like Nifty as well. We believe that, but a dip towards 19,700 to 720 on the futures becomes a good level to go long. 19,640 as a stop loss and a target close to 19,850 should be in the offing. Now, IT as a pack is doing good. There are good, the large caps also doing good. But then I feel now the movement might be focused more on stocks like Wipro. The stock is actually given a good move along with delivery buying. So a 440 as a target, we advocate buying it at 415. The stop loss should be 405. So 440 is what we look into the short term. And again, like Anuj mentioned, SBI has a potential of 618. So we advocate buying it closer to 600, 605. The stop loss should be 595 the stock as well.
Okay, all right. Thanks a lot for that. Well, moving on, Jio Financial Services, the demerger will be happening this week itself. And to understand more about that, Prashant has walked up to the wall to explain all about the demerger details. Prashant, over to you.
You know, this is going to be the big event over the next 48 hours. And this is the demerger of Jio Financial Services from Reliance Industries. Remember that at the time of declaring its second quarter FY23 earnings, Reliance Industries had announced the demerger of Jio Financial Services for a ratio of 1 equity share of Jio Financial for 1 fully paid up equity share held in Reliance Industries. This arrangement is now going to take effect starting day after tomorrow. That is Thursday morning. But first things first, the record date or the ex-date to determine who is eligible to get Jio Financial shares is the 20th of July. So if you own shares in Reliance Industries as of July 20th, you are eligible to get shares of Jio Financial Services. Now, naturally, since Jio Financial is being spun out of Reliance Industries, the share price of Reliance Industries will have to be adjusted accordingly, lower. That would depend on what value to give Jio Financial Services. That's a different matter. I will get to that a little later. On Thursday morning, though, exchanges will hold a special price discovery session for Reliance Industries. Let me explain this with an example. Suppose on Thursday morning, at the end of the special price discovery session, Reliance Industries closes at, say, 900 rupees. Let's also suppose that Reliance closed the prior day, that is Wednesday, at 1,000 rupees per share. The spun-off business, that is Jio Financial Services, will be quoted at 100 rupees. That is simply the difference between the price of the company undergoing the demerger, that is Reliance, on the day prior to the ex-date, and its discovered price in the special pre-open price discovery session on the ex-date, which is Thursday. So Jio Financial Services then, using this example, will be included in the indices. All the indices, I mean, the list was specified by the NSE yesterday. This includes Nifty 50 at that 100 rupees. And it will continue to stay in the indices at the constant price of 100 rupees till Jio Financial is listed. Now, the date of listing of Jio Financial is not known yet. But once Jio Financial stock is listed at a future yet still unknown date, the stock will be removed from the index after the end of the day on the third day of its listing, subject to certain price conditions, which I'm not getting into here. So, for example, if Jio Financial lists on, say, day T, it will be delisted from the indices at the end of T plus 3 days. That basically, in a very short, simple way, is what is going to happen. There are implications for futures and options contracts as well. In the case of Reliance, as is custom, the F&O contracts will expire 1 day prior to the record date. The valuation of how Jio Financial, etc., is going to happen, that perhaps also depends on what the street gives as a value to Jio Financial's holding in Reliance Industries. That perhaps is for a later date. Back to you.
All right. Thanks a lot for that. Very well explained. And of course, that will be the story of the day and story of the next many weeks, of course, the Jio Financial demerger and the implications of that. But let's move on. The other big story that we're tracking is in the real estate space. Kolte Patil Developers is on our radar now. For their Q1 operational numbers, the volumes actually declined 5% sequentially. The collections have also dipped 13%, while the value is absolutely flat. Rahul Talele, Group CEO at Kolte Patil Developers, joins us now to discuss the growth outlook and the way forward. Rahul, thanks a lot for joining in. It's very interesting that, there's been a decline this time around on a sequential basis. Can you tell us what are you expecting for the full year? I think earlier you had guided for a 20% growth in your bookings amount by the end of FY24. Do you stick to that? And what are the trends looking like in the space now?
Thanks, Sonia, for having me on your show. See, first of all, let me clarify. So, real estate is the seasonal business. So, if you want to compare Q1, we have to compare Q1 with the last Q1. So, year-on-year numbers are more logical in real estate space because, the seasonality plays a very important role in real estate buying. So, with that logic, we have grown almost by 60% as compared to year-on-year last year. And likewise, since last 3 consecutive quarters, our sales number are more than 700 crores. So that is a very positive stand for us. And in recent times, company has, undergone an orbital change in last 2 years. Sales have gone up from 1,200 crores to more than 2,200 crores in last financial year. And likewise, going forward, we are expecting a CAGR of 25 to 30% for next 2 years. There are multiple reasons for that. Our collections number are very strong. Our BD pipeline is very strong. In this financial year, we are planning to launch a volume which we have launched in last 3-4 years cumulatively together. So with the good success that we have received in our recent launches, we are confident to have a robust Q2 and Q3 as well. And yes, to answer your question, we are on track to deliver 25 to 30% growth numbers in terms of pre-sales in this financial year.
Okay, so you're saying 25 to 30% growth in pre-sales in FY24, right? That's what you're looking at. Okay, that's fair. The other thing I wanted to ask you was some of the players, at least in the Mumbai market, some of the players are talking about a price decline. I think, they're talking about how the Mumbai market could be a bit saturated and a lot of the traction is moving to Navi Mumbai. But primarily for the markets that you operate in, have you seen any kind of pricing pressure? Are you able to take any price hikes at all?
Yes, so if you see our portfolio across all projects, I mean 8 out of 10 projects in last financial year, we have improved our price realization significantly, in the ranging from 5% to 15%. To talk about our Mumbai portfolio, we have 5 ongoing projects in Mumbai. Over there also we have taken a significant price rise in last 1 year. So just to give you a sense, in one project where we used to sell at around 16,500 to 17,000 on a per square feet sellable area basis. Over there, in recent quarters, we have sold an inventory more than 19,500 rupee a square feet. So there is a jump of more than 10% in Mumbai portfolio as well. And Life Republic, which is our flagship township development and which contributes a large portion of our pre-sales number. Over there, we have across all sectors, across all products, we have improved our price at least by 10% in that project, where we have achieved a pre-sales of around 1100 crores in last financial year. And even in Q1, it was a very robust sales that we have achieved close to 300 crores in that flagship township project with the improved price realization.
All right, Rahul, we're running a little short on time, but just a couple of quick questions. How do you see your exposure panning out between Pune, Mumbai, as well as Bangalore? If you could break that up for us. And you said you have a huge pipeline that you're going to be, launching this year. Quantify it. What is that number?
So the launch pipeline is more than 5,000 crores. Out of that, in Q1, we have launched around 1,100 crores of projects. Q2 and Q3 will be very strong on launch pipeline, and we are on track to deliver, to launch all these 5,000 crores of launches. On top of that, last year our ratio was 80-20. 80% pre-sales was coming from Pune and 20% was coming from Mumbai and Bangalore. In this financial year, since we are talking about significant growth, the numbers will be around 20 to 25% diversification beyond Pune, and rest will be coming from Pune, but with the significant diversification beyond township.
Okay, all the best and thanks for joining in. So that's Kolte Patil saying that no, forget about price declines. They're actually taking some price hikes in many of their Mumbai projects. They have 5 ongoing projects in the Mumbai region and they're looking at a 25 to 30% compounded growth rate in their business going forward. But look at the market. It's surging now. In pre-opening, the rates are settled 80 points higher. Not too far away from that 20,000 mark on the Nifty, and it's banks that are leading from the front. So let's get Sudarshan on board. Sudarshan, looks like it's going to be a day that belongs to banks. At least that's the pre-opening suggestion. What do you do now, and what's the big 9-10 call?
Well, for the Nifty, you wait for an intraday dip and go and buy it. And IndusInd Bank is still a buy with a stop under 1345.
All right, thanks for that, Sudarshan. Mitesh, what about you?
I'll choose a banking name as well. Kotak Bank is a buy with a stop at 1875 for targets of 1945.
Okay, well, let's get Nimesh on board now to tell us what the standout brokerage report of the day is. Nimesh, over to you.
Hi, Sonia. So today's standout is on Havells. An interesting upgrade from UBS. They have upgraded the stock to buy now from neutral, and they've raised the target price sharply to 1,900 versus 1,360 earlier. Now, they believe that the structural growth story is back in focus for Havells alongside these cyclical kickers. Now, they believe that Havells will move up the growth and profitability chain on the back of a sustained revenue market share gain, as well as turnaround in Lloyd, which they acquired a few years back. Now, on back of that, they've raised the FY25 and FY26 earnings forecast by 9 to 10%. They believe that Havells' addressable market, which is currently at $25 billion, can grow at 10% to almost $40 billion by 2028. So, that on back of addressable market going up, on back of earnings improvement, and the fact that they see a turnaround in Lloyd, today UBS has upgraded Havells to buy from neutral, and they've raised the target price to 1,900 now.
Okay, thanks a lot for that. Well, we just have, I think, about a minute or two left before the markets open for the day, 2.5 minutes. So let me get one more call in from Mitesh. Mitesh, your thoughts on Infosys, because, it has signed that big deal, the $2 billion deal. So maybe the trend could be on the upside, which has been the case for tech stocks. What are you seeing on the charts?
So, Infosys, we've been recommending it a few days back when the movement started. But the movement hasn't ended as yet. It kind of came off from the highs yesterday, but I suspect the stock is heading towards levels of 1520 odd. So there's still about 100 kind of an upside left over there. So stay long, and I think, if somebody wants to buy a fresh, you have a slightly deeper stop at 1360. But maybe, if you get it on a percent lower than that, then it's a good entry point. Otherwise, if somebody has the stock, stay long and wait for 1500 plus levels to take profits.
All right, thanks very much for that. Now, LTI Mindtree is one stock which reported numbers post-close yesterday. Rima is here with just shining a spotlight on the numbers. Rima.
Thanks so much for that. So Q1 has been a soft quarter, a very flat growth, 0.1% on a quarter-on-quarter basis, slightly lower than consensus expectations. But in the conference call, what's disappointed the street is that the company is no longer talking about a double-digit growth. In April, when they reported their Q4 numbers, they were still hopeful about a double-digit growth. But in the conference call, they kind of indicated that double-digit growth this year is going to be challenging. And they just reiterated that they are looking to end in the leaders quadrant in terms of growth. Decision making continues to be slow. There is a freeze on hiring, particularly in the banking sector, so that's weighing on growth. And particularly in Q1, they said that many of the deals which they were hopeful, they expected to close in Q1, has spilled over into Q2. EBIT margin performance has been fairly resilient, expanding for the second consecutive quarter. Deal wins are solid at $1.41 billion. Brokerage verdict is mixed. Nomura has a reduced rating. Morgan Stanley has an overweight rating. And the target price, too, is fairly varied between the two. Back to you.
Okay, thanks, Rima, for that. Well, let's brace ourselves for a very strong opening today. The Nifty is indicating a start well above that 19,780 mark. It's I think 80-point gain on the Nifty, and plenty of stocks are delivering today. There's HDFC Bank, ICICI Bank, Infosys, Reliance. At least that's what the pre-opening rates are suggesting. So Big Bang opening perhaps once again record highs, and that 20,000 milestone not too far away. There you have it, 80 points in the green for the Nifty. The sensex is up almost 300 points. Looking pretty solid, after such a big run-up in the last many days. There's no stopping this market. Let's talk about the big gainers. Infosys is actually a big gainer. We were telling you about that $2 billion deal. The street definitely likes that. The stock has come back in a big way as well. This month, Infosys is up almost 8% already and leading from the front this morning. HDFC Bank posts the numbers. A couple of brokerages have raised their target price on the stock after that solid asset quality from yesterday. HSBC raised the target price to 2010 on HDFC Bank. So that one's looking pretty good this morning, leading from the front. Wipro, Reliance ahead of its numbers on Friday is up about 1%. Bajaj Auto, ICICI Bank. It's a secular move really on the upside. All the heavyweights are making their presence felt. SBI is up about 0.3% as well. Tech Mahindra new highs. But what is not looking good? LTI Mindtree, as Rima was just telling us a while back, muted numbers. The stock is down about 3%. Then you have pharma names that have moved to the back burner. DRL, Sun Pharma, a couple of others. Tata Consumer Products, not that great. Britannia. So FMCG and pharma have taken a bit of a step back. I think it's, the rate sensitives that are charging ahead this morning. Talking about some more losers, HDFC Life is under a bit of pressure. Ultratech Cement, Tata Steel, M&M, Eicher Motors just cooling their heels a tad bit. Nothing alarming. But really, the focus is on the headline index. 80 points in the green now, almost at that 20,000 mark. Guys, I must tell you one thing. When the Sensex had hit 20,000, we made those t-shirts. And I remember in the earlier studio, and Anuj, me, Lata had all worn those 20,000 t-shirts, and we got so much flack for it. We took it and threw it away. Since then, of course, the Sensex has moved to 60,000, but here we are with the Nifty now. Are we going to wear t-shirts again?
No.
What do you think?
Going by past history.
You gave us the history, Sonia. Obviously, there are no ways out there. But good to see. We're on our way to around 20,000 odd, and we're almost at 19,800 as we speak. Just a few sessions ago, we were debating whether or not the 19,500 mark has become a bit of a near-term resistance, but we're building onto those gains. We'll have to see where we end up today, but maybe taking some money off the table at 19,800, maybe not such a bad idea. Let's see how this goes. Well, in terms of stocks that are moving around, Delta Corp, well, that stock has bounced back. Remember, late last evening, Mr. Rajiv Chandrasekhar said he's going to be requesting the GST Council to reconsider the 28% tax. So that's why that stock has opened up in the green with a gain of around 2%. The one that's flying away is Sheila Foam because they've acquired 95% stake in Kurlon at a valuation of 2,150 crores odd. The management told us their market share goes up in a big way. They see it as synergy benefits as well, 300 basis points addition out there. So that stock is up close to around 10%. It's already had a big run, but that moves from strength to strength. A couple of other notable movers today. Amara Raja, you had that block trade that took place out there. So that stock's down close to around 4.5% as we speak. Clario selling close to around 14% stake in the company. Tata Elxsi as well. There was some margin compression. So let's see how that stock is opened up. That one comes up for you on the screen as well. And Huhtamaki out there, we had some numbers. Smaller company out there, but there was some margin expansion. So let's see how that one has opened up as well. But a solid opening for sure.
Oh, absolutely. And, we're up 80 points, 19,800 nearly. So this is, as good an opening as I think one can expect. Delta Corp is coming up with about a 2% pop. Just highlighting a few names with large volumes. Stocks at about 187. That got a hammering with those tax changes earlier. Havells is up about 3%, 1337 or so on Havells. Large volumes on this one. Rallis had, I think, reported numbers, 5% on that one, 225. There is Data Matics, which is coming up with large volumes, 7.5%. I highlighted Vaibhav Global, which basically sells imitation jewelry in developed markets like US, etc. It's a completely bombed out stock. High was 1,100, stock still about 350, but 7% yesterday, 7% today. That is what bull markets do, right? It kind of... almost, it leaves no stock behind. Maybe exaggerating here, but some of these stocks which are long forgotten, everything comes back into the mix slowly but surely. Atul Auto ended up 8% yesterday. It's up another 6% this morning. 390 on Atul Auto. You've got Genus Power, which is 190. Idea Force, the recent the drone company which recently listed, 2.5%, 12.23. And Onward Technologies has got a 6% pop, but smaller name and volumes are, large for this point, but let's see. Amara Raja, I think we highlighted 4.5% lower, 655, 656. Of course, that block has happened. It's at the bottom of the screen, where 16% equity has changed hands. Tata Elxsi is down 2.5%. LTI Mindtree is down about 3.5%. So LTI Mindtree, of course, results, and maybe Tata Elxsi selling off a little bit in sympathy there. I highlighted Angel One yesterday morning on Market Laser. Stock was down almost 8% by close. It opened down 5 and closed down 8. It's down another 3% this morning. Stocks at about 15.45, Angel One, with what's happening. And one big mover for the last 2 days has been Precision Camshaft, 20% on Friday, 20% yesterday. It's down. It's pulling back just a little bit, 3.5% lower this morning as we begin another trading session. Now, Samir Arora is joining us, founder and fund manager at Helios Capital. Samir, great to have you with us here. It's a pleasure. Thanks very much. Interesting tidbit. I just wanted to tell you this and do have, I don't know if you have any thoughts. Someone I was chatting with was not complaining about the bull market. He said, but progressively as the market continues to go higher, he said, my portfolio is not keeping track with the gains that you're seeing on the index. Because, you got... participation widens, right? Everyone makes money, but participation widens and all kinds of stocks go up, which it would be out of one's radar. You can't hop into one stock, new stock, and all of that stuff.
That is why you're supposed to focus on the stocks that you have on your screen. Because otherwise, if every day you look at any one stock and say, oh my God, this stock is up or that stock is up. But broadly, if you look at the US, it looks more hyper than India. India, I think, is still disciplined in the sense that in nearly, half year is over and the market, that is Nifty, is up like 10%. So that is not so out of line with any, normal strong year. And therefore, I feel much more bullish that way on India right now than I am in US, where also, as you know,
But things, Samir, just one point on that US bid, things have turned dramatically last 4-5 days, actually last 6-7 days in the US as well. Dollar is crashed. And the yields have come off very sharply, and the famous Goldilocks, potential Goldilocks is back.
But although these tech stocks have done really well, these 6-7 stocks, but my feeling there is that the interest rates will still be hiked. At least one will be hiked now, and the language will not be changed, because whatever we say, their target is 2%. Now they have to otherwise change the target. So if so let us say the returns are capped at, the interest rate is from here is not hiked. But for it to be cut, it looks too wild. And so therefore, if that is not cut for a year and the mortgage rates are 7.25%, I think tech in US is better than the overall market in US, because the rest of it is much more economically sensitive, although it's the tech stocks which go up and down a lot because of discounting maybe, rather than because of the impact on their earnings. So overall, I can't imagine that the interest rates will be cut because one inflation, or will be even paused right now because one inflation number came out better. But who knows? Let's focus on India, which is easier story to imagine.
It is. And what a story, right, Samir? Before I ask you about all of that, we were just debating whether we should make those 20,000 T-shirts and wear them since the Nifty is hitting 20,000.
So I heard that you can recycle those, but as long as the sensex word is removed, and you can put some new this thing on it. But broadly, it is right that you should not oversell any of these, because at these points, the people get very excited, and some people may look at it that what a big milestone, and therefore it's overdone. And according to me, in even a slightly longer term, it is not at all overdone, simply by looking at 2-year numbers or looking at them in dollars. And therefore, it's not a high which has come very quickly over its previous high. It's taken 2 years. So broadly, if you look at annualized returns from the market last year, this year, they are well below normal. I mean, not this year alone, but if you combine it with last year.
No, absolutely. I mean, we were doing that study on how the valuations are stacked up as well, right? I mean, the Nifty is still between the 18, 19 times range, and it's just slightly higher than the 10-year average. So valuations of India are not that expensive compared to its own average. In that context, what are the spaces to look at? I heard you briefly mention tech, and it's come back in a big way in the last couple of months. Is that the space to latch on to now?
So right now, we did not have it going in, and we still don't have it. And right now, we don't feel like changing, only because the rally has been broad. So if you look at even this month, the market is up 3%, and the Nifty IT is up some 5%. And these, other than TCS and Infosys, which are up 7-8%, rest are up less than the market in some mostly. So therefore, you're not feeling left out because of the fact that it is broad. If the market had been narrow, and then we would have had to bang our heads whether we should do it or not. But right now, my feeling is that the guidance and the numbers for this year are not exciting. It is true that the IT sector has rallied this month, but the rest of the world, rest of the market is also doing well. So why bother about changing? In fact, State Bank of India is up much less than Infi, or not Infi maybe, but TCS is up, and it just looks an easier story. So for us, we have not made that change because the rest of the market is also doing well, and some of our stocks are also doing well. But over time, plus minus 3-6 months, we may think about it. Right now, this idea that the client is saying that currently I don't have business for you, but in 9 months you'll have a lot of business from me, and therefore I'm giving you orders. It looks that those orders are more to do with a different thing, which is maybe cost takeout and from a different budget or basket, and those are mostly more cost conscious and lower margin businesses. And therefore, right now, because we don't have it, we don't feel like doing it, because the rest of the market is anyway also doing well. So my bet in the last few months was that as long as IT doesn't pain me, I can live without it. And that currently it's not paining me, although it's going up quite well on its own.
All right. Hi, Samir. Good morning. I don't know about the 20,000 T-shirts, but I'm looking forward to the Sensex hitting 1 lakh. Hopefully, I'm here as well. And that 1 lakh on the T-shirt will look fantastic. But Samir, what have you bought recently? The last time you joined us, you told us about Tesla, Nvidia as well. A couple of those stocks.
Forget about the US. By the way, US, I bought UBS recently. But forget about that.
Let's keep that aside. So we know you have bought UBS, so let's keep that aside. Let's talk about India.
Correct. So in India, basically in financials and consumer, we added, as I said, because we did not have or do not have IT, that money got reallocated to these sectors, and it's broadly there that we have done. One stock that I bought maybe 2-3 months ago was HPCL, which I told on your sister channel, the Hindi one. But basically, I don't have any preset this thing. If there is clear value, I can buy value. If there is growth, I can buy growth. If it is loss making also, I can justify if I have to. But broadly speaking, there have been not very many new stocks because our net is high, our gross is high. Our net is like nearly 75%, which on average has been 62% for 18 years. So there was not so much capacity to buy. In fact, if I one day have to buy ITL, I'll have to bang my head to say what to sell to fund it. Therefore, I'm just going along and saying I'm doing okay, doesn't matter if IT is doing well on its own or not. But it looks to me that it is overdone there, at least on a relative basis, relative to market.
Yeah, no, absolutely. So, I mean, last time you were on, we were talking about all these FT headlines, right, about China. There are equally that many articles about India. That note which Capital International wrote, they say, that has gone viral. Bernstein wrote a note. There was, of course, Morgan has been writing. There were so many others who've kind of said, with titles like, will this be India's decade? What do you make of it?
I've been saying it for 25 years. But then at the end of that, I have realized that there is no need to oversell anything to get people to invest in equities in India, because India has been doing well in the last 25 years also. In fact, for the last 25 years, India is right at the top as in number one, and also for 20 years. And for 5, 10 and 15 years, we are number 2 after US. Point being, we don't want to make it a story that so far it was so bad, this market, but now it will turn because it is India's decade. The story is that India as a market has been generally doing well. And maybe all these new things in terms of policies or digitalization or, slightly better current account deficit and maybe slightly better currency, etc., will just make you more confident that the same kind of returns can be had in the future. Because our biggest dream would be to get the returns that the market gave in the last 25 years, because they were world number 1 in returns.
Did you, by the way, see that 2075 estimate?
Yeah, but since I invest with a 1 to 3 year horizon and multiples of 1 to 3 years, many multiples will be required to reach 75.
50
and that is basically Excel.
Nigel was saying whether he'll be there when the sensex hits 1 lakh. Who's going to be there when 2075? God knows.
Normally I justify it and saying my kids are going to have a great time. They'll also be quite old.
Well past their prime at that time. Okay, but I wanted to talk to you about one space that we're going to have a very lengthy discussion on in some time, which is EVs, and I know that's where a lot of your focus lies as well. Just want to give you one number, right? In India, so far in the first half of 2023, the EV sales were almost 700,000 units, and this is 70% of what you did in the full year in the previous year. So it's, we've already reached that level, which is much higher than what we've done in the preceding years, particularly for India. But I want to understand from you on these stocks, right, that have gained quite a bit, this electric vehicle space. Do you think it's just the start of a multi-year upcycle, whether it's Tata Motors, M&M, Maruti and the likes, even in the broader markets?
No, I think it's absolutely overdone. There is absolutely no logic for saying that EV car sales will be more, therefore you have to buy all of these, simply because the overall car sales are being substituting. So the same guys were selling car A, which was the IC engine, and now they'll be selling car B. So let's look at Tata Motors. If it is going to spend $15 billion over 5 years on capex, do you think that there'll be a return earned on that capex with EV? I think absolutely zero chance. These investments are being made to remain in business. These investments are required because the environment or the government or the public has asked these companies to change their technology and make new cars. The public or the environment is not saying that therefore we'll buy more cars or that therefore you will be allowed to make a higher margin, but just to remain in business, instead of making car A, make car B and spend billions of dollars in that transition. It is a massive value destroyer.
Okay.
Value destroyer.
I don't think...
Not climate destroyer, not whatever else the external environment may need. But from an economics point of view, it is simply destroying capital, because you were making cars and now you're asked to make a new set of cars. and spend all this money, and this money will not be recovered. There is no way. It is just to stay in the game.
Okay, you know what? In fact, Sameer, if you have about a couple of minutes more, we have two gentlemen from this space that are joining in. So I want you to just listen into what they're saying and perhaps comment, question them, because, you know, they have, of course, a completely different point of view. They're stakeholders in this business, right? So let me get to them straight away. As I was saying just a while back, the EV sales in India, right, overall have hit 700,000 units in the first 6 months of 2023. And that's already 70% of what we saw in the previous year, the full year sales. So the ecosystem has improved quite a bit, but the charging infrastructure is something that we are questioning. Jitendra Sharma, who's the managing director and founder at Okinawa Autotech, and Kaushik Bhattacharya, the managing director and head industrials investment banking at Avendus Capital, join in now. Avendus Capital, in fact, put out a very interesting detailed report on the charging infrastructure across the globe, what China and Europe are doing very well and how India can sort of catch up. So Kaushik, at the onset, let's just put, you know, the numbers on board. Tell us a little bit about how the charging infrastructure has risen in India up until now, and what more is left to be done to meet the, you know, the targets that sort of developed countries like the US and Europe are putting out.
Sure. So I think in the last 1 year, the public charging infrastructure in India has grown by about 10x. You know, we ended 2021 with about a little over 1,000 chargers. Now we have almost 11,000 chargers. And this is a very small number compared to what we will eventually need when the penetration of EVs is at a steady state. Our guesstimate is that by 2030, when some of the categories would have reached over 50% EV penetration, India would require almost 1 million chargers or slightly higher than that. So there is a lot of distance to cover, and many of the private operators, with the support of the government, are looking to set up businesses which will cater to this market.
Okay, in fact, you know, let's put some numbers to that, right? The number of electric cars per public charger. In United States, it's about 23 electric cars per public charger. In Europe, it's 14 electric cars per public charger. And in India, we have only 7 electric cars per public charger. So, of course, there's lots more work to be done. Sameer, I'm going to toss it to you in just a bit, but I want to get Mr. Jitendra Sharma as well, Managing Director and Founder at Okinawa Autotech, into the discussion to get his first comment in. And then I'll head over to Sameer. Mr. Sharma, what do you think it would take for us to reach that level, right, that the US, Europe have at the moment? And where do you see the big hurdle at the moment in terms of the charging infrastructure?
If you see, like, charging infrastructure is one of the major role play in this EV, we can say, market. Because in the India, the awareness is very important. Everyone thinks about the EV, that if it is a EV vehicle, we need the charging. Because the people perception is like this. It is just like the petrol pump. If you see in India, if you see the petrol pump his numbers is too high in number, because geographically India is a very big country. And the penetration of the, whether it's a two-wheeler or the four-wheeler, is in a very deep market, whether it's a tier 2, tier 3 cities also. The people perception is like that. If you have the EV, whether it's a car or the two-wheeler, how they will charge. For this, if you want to really adopt it, so the technology is new. The people want to understand how this technology works. And the EV charging is one of the bigger factors which enhance the market share of the EV across as compared to the IC also. So in this case, if you see, the charging is very important. And of course, the government is doing lots of work in the charging infrastructure. Of course, if you see as compared to the other part of the world, India is very behind in terms of number, like as you said, that 7 cars per charging. So charging station, it means we have to do lots of work for this. So in this, not even the government, even the aggregators who are working, the private players who are working together with the government, so that they will bring more and more business model in such a way that more charging station will come across geographically in India, in the different part of India, and if it will enhance the market share also.
Okay, Sameer, you want to comment on that?
No, you know, I had absolutely no issue with the guys who are direct beneficiaries of EV alone. The names you gave initially to me were the guys who are making IC cars and now are forced to make EV cars. And for them, it's destroying of capital. But obviously, somebody who's a direct beneficiary or supplying only to the EV side or part of the new story of EV, independent of having to switch from IC to this, obviously there'll be big beneficiaries and charging and other things, and anybody associated with them will have good growth over time. So my issue was on a different set of companies.
Okay, got it.
I just want to add one thing. Like if you compare like India as a automobile hub, but if you see compare with the two-wheeler, like two-wheeler people are not thinking more about the charging station. Of course, it is for the commercial vehicles or the passenger vehicle. When we talk about the two-wheeler, like in case of Okinawa and other places also, we have a detachable battery, where the people have the ease to charge their battery at their own convenience, like when we charge the mobile phone. Because if you see the two-wheeler market is so big, if you talk about the charging station for every two-wheeler, four-wheeler, then it's required lots and lots of efforts and years actually to build that type of charging infrastructure in India. So that is one of the, you can say, comfort as a company like Okinawa we give to our customer, that you can charge at your own place, whether it's your home, maybe your office, or maybe any public charging also. So that will bring more and more technology adoption for the consumer in the EV two-wheeler especially.
Okay, that's fair enough for the two-wheeler space, but also for the passenger vehicle space. Kaushik, I wanted you to come in on this. It's sort of a chicken and egg situation, right? I mean, until you don't have enough EVs, the charging infrastructure becomes, putting more charging infrastructure becomes unviable. And until there's not enough charging infrastructure, people will not go ahead and buy EVs. So what do you think the government should do in order to break this deadlock?
Sure. So in India, the number of public chargers that we have is actually, given the current penetration, a fairly healthy number, right? So it actually stacks off better than some of the countries, because this is cars per charger, and it's a reflection of the low penetration and not a very robust charging infrastructure. I think as the penetration, the four-wheeler penetration today in India stands at a little over 1%. From an electric vehicle standpoint. So as that increases, I think more number of public chargers would be required. The government is taking an indirect support approach there, apart from putting a small outlay in FAME 2, which is yet to be deployed and to be used up before FY24 kind of concludes. I think the couple of ways in which they can help the charging infrastructure is by making the grid more robust and more green. And secondly, also standardizing some of the charging standards, at a connector level, so that there could be an uniform charging infrastructure which could be used by various OEMs. I think those are the two immediate steps that they should be working on.
Okay, just one quick question. There are a lot of big deals that have taken place in this EV space, in the charging infrastructure space as well. You know, some of the top players, whether it's Exicom, Tata Power, ABB, Voltic, etc. I just want to understand, what is the investment that's required at the moment to set up a charging infrastructure for EVs? Anything that the government can do to sort of make this process easier? And any more deals that you see come through? Mr. Sharma, your view?
I think, of course, like all the players who are working on this, so like these are the people who are working as an aggregator for the customer as well as for the OEMs. But in my view, it's not only the responsibility of the government, it's a joint responsibility of all the stakeholders, whether it's a OEM, government, policy maker, and of course the aggregator who is bringing this type of business model on it. Of course, like I think Kaushik has rightly said, because we have to make one is most important thing is the commonization of the protocol of the, whether it's a battery protocol or the maybe connector, because which is very important for the public charging station. Because if you have the different type of the, you can say connector, it's very difficult for you to charge at the different public charging stations. So these are the people who are working already on these projects, and I think government is also pushing on it. So I think with the joint efforts of all these stakeholders, I think it will build a new, you can say, huge charging infrastructure in the coming future.
Okay. Thank you, gentlemen, for joining in. We've run out of time, not out of questions, but of course, this is a greater discussion for another day. So I'll invite you guys over at another time. Thanks a lot for joining in.
Is Samir still there, or
No, I think maybe he's gone to charge his EV.
Well, I want to ask him whether he's investing directly into, because private investments into some of these EV startups, right? I mean, it's booming, so that's another. But that's a private space, only not available to everyone.
But a very important point that the gentleman made, saying that the charging infrastructure is actually good in India per car. It's the low penetration. People are just not buying as many EVs, and maybe because they feel there's this range anxiety, right? People that still have. So once that's overcome, maybe penetration will go up.
Absolutely. I mean, I think China, 25% of vehicles, passenger vehicles now sold are electric vehicles, passenger cars, basically. And, but they're leaps and bounds ahead of most developed markets as well. With things here picking up, as you heard from both the gentlemen. We'll take a quick commercial break here. We are back with the analysts at Sanford Bernstein, India, to discuss the HDFC Bank Q1 earnings and, of course, implications for the broader space there. We'll bring you our special segment after that, Quarter Se Quarter Tak, where we put the focus on auto expectations. And, of course, the analyst joins us for that as well. Stay tuned.
Welcome back. You're tuned into Bazaar Morning Call. Well, as we speak, the markets almost went to around the 19,800 odd mark. But from the top, we've come off close to around 50 points. So some money being taken off the table. Not such a bad idea after the kind of run that we have seen. Well, the mid-cap index, that's trading in the red. And if you look at the advanced decline ratio, it started off with way more number of stocks advancing in comparison to the number of stocks declining. Now you have a few more stocks that are declining in comparison to the number of stocks that are advancing. So the crisscross lines should come up for you as well. But banks are doing well. And HDFC Bank, well, they delivered a steady set of numbers. The standalone net interest income, profits as well, they meet estimates. In fact, let's listen in to what HDFC Bank CFO Srinivasan Vaidyanathan had to say about the quarter gone by in their conference call.
HDFC Limited, as you all know, excelled in nurturing trust in their customer engagement over 4 decades of operation. Home loan product, which is a very emotional product, we would like to harness this bond with the home loan customers by leveraging our exhaustive distribution reach, comprehensive digital platform to upsell complete bouquet of banks products and subsidiaries products to all these customers. Wholesale grew 12%, and banks advances growth of IBPC grew by 20%. When we include HDFC's individual home loan book, the pro forma core loan growth for the merged entities at 18.7% year on year. We continue to focus on our technology investments in addition to distribution network expansion. Balance sheet remains resilient. LCR for the quarter was at 126%. In the medium to long term, distribution and reach is the key. This is what will provide funding through better engagement. Cost to income ratio for the quarter was at 42.8%, reflecting the cost of investments, which from a timing point of view has been chosen during benign credit environment to capture the market opportunity. This will moderate and revert to below previous levels after the break-even and payback starts from these investments flow through. The slippage ratio for the current quarter was 35 basis points. Slippage ratio, excluding agriculture, because as I said, agriculture is seasonal, was at 26 basis points for the quarter. On the provisions, we recorded provisions of 2,850 crores against 3,200 crores in prior year. The provision coverage ratio was 75%.
Well, in fact, Bernstein has given an outperform rating for the stock with a target price of around 2,300. Pranav Dheeraj Gudlapale, the senior research analyst at Stanford Bernstein, joins us on the show. Hi, Pranav. Good morning. Thanks so much for joining in. Well, give us your quick analysis of the numbers. They look quite good. The street likes it as well. What are the key triggers you're looking at from here on?
Good morning, Prashant. Thanks for being on the show. So I think it was a positive set of numbers. Firstly, the NII growth at 21% was a key positive because it lays to rest a lot of controversy that had started off last week with the Q1 headline update that came in. There were many combinations and permutations combinations of growth numbers, depending on what you include and exclude. But with NII at 21% growth, I think that lays to rest a lot of discussions on the growth numbers. The other positive related to the NII was the flat NIM. I think a flat NIM in the current context where there's a Q-on-Q NIM pressure across the board, I think that, again, turns out as a key positive. And from the earnings call last night, I think the big positive was guidance towards no big one-offs because the merger, that's to be expected next quarter. So I think that should also ease a lot of concerns that people had on the merger-related impact coming in the next quarter.
Okay. So do you see these growth rates as something that is sustainable through the course of FY24? What are you penciling in? And on the stock price as well, what would the risk reward look like now for a long-term investor?
Okay. I think the growth rates should be closer to the 18% mark, especially once you include the mortgage business in. I think the retail mortgages plus HDFC Bank standalone should be at about 18% mark. That's our expectation. And in terms of the risk reward, I think there's definitely skewed favorably because there should be a re-rating once the merger overhang lifts, right? I think two things happened. One, all the uncertainty around what the combined entity's profitability and growth would be, I think that eases in the next couple of quarters. So that is one. And secondly, I think on a relative basis, what's happened in the last 12 to 18 months is that many peers as well as smaller banks have shown similar numbers, if not better numbers than what an HDFC has managed to deliver. I think that will start to ease or change once the easy comps start to go away, right? So 3Q was really the point where the returns started improving for a lot of the banks. So come third quarter, the year-on-year numbers will start to look a lot more ordinary and where HDFC will again kind of stand out. So I think these two factors should drive a good re-rating from here. So we're obviously quite bullish on the stock at this stage.
Okay, very quickly, you're bullish on HDFC Bank. ICICI Bank comes out with numbers on Saturday. Any quick thoughts on what to expect?
I would say that the NIM decline should be marginal, nothing steep. And therefore, a slight NIM decline combined with OPEX coming back quite strongly will mean that you will have muted ROA improvements or maybe a slight ROA decline Q-on-Q basis. But still very healthy on a year-on-year basis. So you should still see a very healthy EPS growth on a year-on-year basis for ICICI as well.
All right, Pranav, last couple of questions before we let you go. What about the PSU banking names? What's your view out there? Some of them have seen a big rally. In the middle, they had a bit of a lull. But view from here on, and what's your pecking order?
I think there's still a few quarters of operating performance for PSU banks almost matching that of the private sector banks. They are sitting with excess liquidity and until that gets used up, you will see growth numbers almost matching that of private sector banks. But beyond that, I think the key concern there is the deposit growth remains quite weak for the PSUs compared to the PBBs, which is what will become the constraint for their growth going forward. Some room left for rally there, and SBI is clearly a top pick there. I think there is some overhang due to idiosyncratic factors. And that going away should mean that the premium was at least the other PSU banks should emerge meaningfully. So SBI would be a top pick amongst the PSU names.
Okay, all right. Pranav, thanks a lot for stopping by and in fact giving us your view on the banking space. Wishing you a good day ahead as well. Well, a quick check on the markets then. That intraday dip got bought into. We're holding with a gain of close to around 60 points. The good news is that the mid-cap index has moved back into the green, so that's pretty good news. And the number of stocks advancing just in the last 3-4 minutes has moved up by close to around 60 stocks. So that's good. Now we have more number of stocks that are advancing in comparison to the number of stocks that are declining. And now just take a look at that. They crisscross each other. Now we still have the advances outweighing the declines. Well, time for our special offering then. Quarter se quarter tak. Today, Sonia has moved over to the big wall to tell us about expectations from the auto space. Sonia.
Well, at the onset, let me tell you that the auto index has significantly outperformed the headline Nifty this year. While the Nifty is up 8% in 2023 so far, the auto index is up a whopping 24%. Now, this is largely because there has been a recovery in volumes and strong margins, which have aided stocks. So let's start with the results calendar first, which is on your screen. In July, we have companies like Ashok Leyland, TVS Motor, Maruti, Tata Motors that will be reporting their earnings, on the dates mentioned on your screen. So what can we expect from the earnings this time around? Now, Q1 FY24 will be a good quarter for the auto sector. Brokerage firm Jefferies is expecting the Q1 aggregate revenues to rise 16% year-on-year, boosted by higher prices that the companies have undertaken. Passenger vehicles and two-wheeler wholesales grew about 9 to 11% year-on-year in Q1, which was very good, while truck and tractor wholesales declined about 1 to 7%. So that was one pocket that didn't look very good. Brokerage firm Motilal Oswal says that exports seem to have largely bottomed out for the sector. Now, the big positive this time is the margin improvement for the sector on the whole. EBITDA margins will improve for the 5th consecutive quarter in a row for the auto universe. In fact, Jefferies says that the aggregate EBITDA is expected to rise a 49% year-on-year. Let's move on to some stock-wise expectations now. Tata Motors has been the biggest auto gainer this year, and the company is expected to report its 3rd consecutive quarter of a consolidated profit, while the company has already guided for Jaguar Land Rover's free cash flow to hit £400 million plus in Q1 of FY24. For players like M&M, there is very strong volume growth in the auto segment due to improving supply chain as well as stable tractor volumes year-on-year. That will aid the business. Morgan Stanley says that M&M is likely to see the sharpest margin expansion amongst all the four-wheeler players. And finally, for two-wheelers like TVS Motor, the domestic two-wheeler volumes witnessed a sharp growth this time, up almost 30% year-on-year, but exports were still under stress as volumes declined 33% year-on-year. Well, we have Aniket Mhatre, who tracks the space very closely at HDFC Securities, who joins us now to talk about that. Aniket, you just heard out what the overall expectations are, but you tell us, what is the pros and cons this time, which would be the hits, which could be the misses in this quarter's numbers?
Sure. Hi, good morning, Sonia. Thank you for having me on your show. Just to set the context right, let me just take you quickly through the volumes that have been reported so far at an industry level, right? So passenger vehicles have grown almost 9% year-on-year this year, but utility vehicles within that have grown almost 17%, which means that the UV mix within passenger vehicles has now improved to 54%. And if you look at players, Maruti and M&M have clearly gained market share in the first quarter, and they continue to gain share to the extent that Maruti is now the market leader and has recovered back to 23% market share in UVs. They have been, you'd be aware, they have been targeting 25% market share this year. They are already at 23% by Q1. In two-wheeler space, you have seen a 10% volume growth in the first quarter, but motorcycles have done better at 14% volume growth related to scooters who have delivered a 5% growth. Within motorcycles, Hero MotoCorp continues to lose market share. It is at a decadal low of almost 45%. And the primary reason for that has been the fact that the entry-level category is just not improving. And Hero is at the moment losing market share in the 125cc category. And Bajaj and TVS, on the other hand, have gained market share in Q1. Bajaj market share has moved to 19%, while TVS has moved to 10%, close to 11%, which is a record high for TVS as well. In commercial vehicles, commercial vehicle sector per se has sort of delivered a 3% decline over a high base, and of course, fourth quarter pre-buy has also led to subdued volumes for CVs in Q1. Within that, MHCVs have declined, have grown about 2.5%. LCVs has declined 6%. Within that, Tata Motors has actually lost market share across the board. Right, like you rightly pointed out, this year on a year-on-year basis, all the players who will see a very phenomenal margin improvement for the simple reason that last few quarters we have been seeing raw material decline. Right, most of the key raw materials have declined anywhere between 5 to 22% on a YOY basis. So on a YOY basis, you will see all players reporting very healthy margins. But on a sequential basis, you will see players like two-wheelers or even passenger vehicles report a margin improvement on the relative basis.
Sure.
Yeah.
Particularly for Tata Motors, I wanted your thoughts because the stock has already rallied about 60% this year, and the company has already given that guidance, right, of free cash flow, £400 million plus. So you think all the good news is in the price, or is there anything that can positively surprise in this quarter's numbers?
Right. So Tata Motors, if you see in JLR, for instance, they have already seen a sequential flat volumes, which was exactly in line with their guidance. If you compare the FCF relative to the FCF they reported Q4, they are guiding for an FCF closer to 400 million GBP, while they had reported somewhere closer to 800 million GBP, if I'm not mistaken, in Q4, which would mean that margins could be a bit under pressure on a QOQ basis, given that JAG mix is slightly higher on a QOQ basis, and even the higher profitable models, which is RR and RR Sport, are also relatively lower in terms of mix in Q1. So on a relative basis, you will see some margin dip, and possibly there could be some adverse movement in terms of working capital. And as I said, way back in India, in commercial vehicles, they have underperformed the peers, which would mean the margin improvement may not be to the tune we might witness in Ashok Leyland. So given the stock movement, clearly, I think the good news is already in the price. We at the moment have a reduced rating on Tata Motors.
Reduced rating on Tata Motors. The good news is already in the price. I expected that from you. But just one final question. We had a very extensive EV discussion a while back. I don't know if you had a chance to listen into it, but the sum and substance is that EV penetration is rising in India, and there's a lot of untapped potential, right? Especially in the charging infrastructure space. Which are the companies, if you had to identify 3 or 4, where there's still more earnings growth because of the EV penetration?
So if you look at EV penetration, clearly one of the players, which is much ahead of peers, is clearly Tata Motors, right? Because Tata Motors has with its group companies, all of it in one place, right? Even the charging infra, with the help of Tata Power, for instance, they are setting up a battery assembly plant within the group again. And they have their own component players as well in Tata Autocom, etc. So the ecosystem per se, from a readiness perspective, I think Tata Motors is well ahead of the curve within the listed players. Apart from that, even a Maruti Suzuki, for instance, they are at the back end clearly working with Suzuki, with Toyota and Denso, etc. In terms of setting up a battery assembly facility in India. When the time is right, we understand Maruti will launch their first product, and finally even M&M for that instance, right? M&M is also doing its bit on the EV front. They've already launched the XUV400, and they have a very healthy product pipeline from 2025 onwards. So these players are doing very well. Of course, apart from you would be aware, in two-wheelers, TVS is well ahead of the curve in the listed space. iQube is doing exceedingly well for them. So these are some of the names that that come to mind when, as far as the EV transition is concerned, beneficiaries from an EV transition is concerned.
And the top auto ancillaries that still have a long headway in terms of EV penetration?
So, in terms of ancillaries, I would tend to believe Minda Industries are doing a lot of work in that space. Even players like Sona Comstar, for instance, those guys are doing relatively well. And other players, of course, you have a Gabriel who is into suspensions, and they are also supplying quite a few parts in EVs. Even a player like Minda Corp is doing a lot of work in EVs. So there are a lot of these players who are doing making meaningful inroads in the EV space at the moment, and that should continue going forward. As OEMs look towards localization, these players would tend to have a higher share of revenues from electric vehicles.
All right, we will let you go on that note. Thanks a lot for that, Aniket. Pleasure. That's HDFC Securities with what to expect this quarter from the auto space. Good quarter expected this time around. Mitesh Thakkar will join in on the other side for some technical trades. The market has cooled off a tad bit. We'll focus on that in a bit.
Okay, welcome back. We got the market, which is, I think, up 50 points. It's been, was it the high point of the day right at the open, fell and gave up most of the gains, was up just about 25, 30 points. Picked up since then, but not quite at the day's high. 19,754 is where we are trading at this point in time. Market breadth is also narrowed. I mean, if you look at the advanced decline ratio, it's closer now. I mean, 1,100 stocks are higher and about 950 stocks are lower at this point in time. Was very wide, the gap right at the word go. Midesh is with us with fresh trading ideas. Midesh, hi, good morning.
Good morning, Prashant. I have a buy call on Havells. I think that's a stock which is open with a gap up and is continuing some momentum on the upside. It's come off the day's high, but I think the overall structure is positive. So buy here with the stop at 13.10 for targets of 13.70. And the other one is a buy on Axis Bank. We earlier had buys on Kotak and HDFC Bank. Axis Bank is just reversing on the hourly chart. So buy here with the stop at 960 for targets for 1,010.
Midesh, sorry, just one quick word on Angel One, if you will. I'd highlighted this yesterday. It's down 5% now. I mean, 10, 15, 11. Any thoughts on this one?
I haven't been tracking it regularly, Prashant, but a quick look at the chart tells me that we had a gap down day before yesterday, and this move seems to be a continuation of that move. I think there's some support around the levels of 1450, and in the worst case scenario, which also looks very possible, is that the stock can head towards 1355. So maybe around 1450 you will see some support coming, but I think the structure is negative. So today may not be the best time to sell because we are already down 5%, but on a pullback, if somebody has it closer to about 1585, 1580 zones, I think that's the ideal level to sell the stock if somebody's holding it out, and I think you get it at lower levels to cover it back in the next few weeks.
Okay, well, the stock of the moment undoubtedly is Sheila Foam. Investors of Sheila Foam sleeping well tonight, I'm sure. If nothing else, right? 9% higher now on that stock after that acquisition. So I think it's working for everyone. But let's hop across to Manisha to tell us about the commodity markets and all that she's tracking there. Manisha, morning.
Thank you for that, Sonia. But I'm looking focus on the coal prices, which are trading at a 2-year lows right now at $130 a ton on the last count there. Well, the pressure on the coal prices comes in because of the slow economic recovery that we've seen from China. China, remember, is one of the major producers and consumers of coal as well. And with weak economic data that we've been dealing with in the last 24 hours especially, have put further pressure on prices. Also, the fall in natural gas prices has aided Europe to shift towards gas and away from coal, and that has been supportive. Coal, remember, still supplies 1/3 of global electricity generation, and this year the markets are looking at stronger demand estimates coming in. So Asia imports are estimated to increase by 2.3% at around 852 million tons in this year itself. Also, there are higher supplies expected from India, Indonesia, Australia, and that weighs onto the prices. Australia, for example, is expected to increase production by 7.8% in this year. You could be looking at Indonesia increasing exports by nearly 2.4% as well. So now when you look at the Chinese production when it comes to coal, that has been increasing on a month-on-month basis. In the month of May, if it was 12.4 million tons, month of June has seen an increase up to nearly 13 million tons in sense of coal production. Indian production also is expected to be on the higher side. FY23 saw coal production at around 893 million tons. FY24 targets by the government is more than 1,000 million tons there. When you look at the prices, well, that really tells you the story. We did see an all-time high last year at $457 a ton. This year started with $400 a ton. We have seen a low of $125 in the previous month and currently trading at $130 a ton. So it has been a very sharp decline that you have seen in this year itself coming in for the coal prices. Much of that because of weak China demand and also natural gas prices falling as well.
Okay, Manisha, thanks a lot for that. Let's now cut across to Gautam Adani. He's addressing the Adani Group AGM. So let's listen in.
While SEBI is still to submit its report, we remain confident of our governance and disclosure standards. It is my commitment that we will continue to strive to keep improving this every single day. Our track records speaks for itself, and I am grateful for the support our stakeholders have shown as we went through these challenges. It is worth noting that even during this crisis, not only did we raise several billions from international investors, but also that no credit agencies in India or abroad cut any of our ratings. This is the strongest validation of the belief that the investors have in your company's governance and capital allocation practices. Over the past decade, one statement that I have repeated dozens of times is my belief in the future of the nation we call our Matrubhumi. Let me try and set some context.
Okay, we'll get back to that when there are more details. But for now, let's take a quick break. On the other side of the break, we have our special segment, It's the Economy. Lata will get chatting with Chetan Iyer of Morgan Stanley to discuss their latest report on Asia growth outlook and its impact on India. Stay tuned.